Welcome to Graphite Hub's interview series, a series dedicated to all things graphite. Lately, Graphite Hub has been taking a deep dive into CarbonScape, and CarbonScape is a New Zealand-based company turning wood chips into graphite. And to carry this conversation on, I'm joined by Vincent Ledoux, CarbonScape's Chief Commercial Officer. So welcome to the series, Vincent.
Thanks a lot, Harry. Nice to see you.
So I understand, Vincent, it's been quite a busy time for you recently. Would you mind giving us a quick overview of what's been happening?
Yeah, absolutely. So I think in general, I like to explain it in from a value chain perspective. So upstream, midstream, downstream. For us, upstream is the forestry industry. The goal for us is to secure the right partners who will be able to supply to us wood products, managed sustainably, but also at the right price. So this year, we've been able to secure a number of offtake agreements with forestry groups for mass production of biographite in both Europe and North America. And we're also starting to work with some Southeastern Asian partners. So for us, we see the forestry industry not just as a supplier of feedstock, but we also see those groups are strategic partners because we're looking at potential site co-location, shared infrastructure, support on the expertise as well, and capital injection. So those relationships are key upstream. Now, when you look at midstream, this is really the heart of our company. This is our patented technology. And as you know, you visited the asset in New Zealand. We've been operating our pilot plant now for a few years, and we're now working on implementing our scale-up strategy. It doesn't mean we're moving straight away from pilots to mass production, but we are targeting an intermediary step to further de-risk our technology and also to push larger samples for our customers. So we're looking at interacting with a number of key graphite anodes players in Asia, because we are looking at implementing our technology using their assets, their equipment, and benefiting from their expertise to help us to generate additional data, which will then help us to inform the final investment decision for mass production. And just to make it clear, it doesn't mean that we are going to mass produce biographite in Asia. It just means that we're choosing a faster path to market by de-risking the technology of the right partner in the region, and then look at implementing mass production to supply Western markets in both Europe and North America. So this year has been key to negotiate those contracts with those partners. And finally, downstream, which for me is the most exciting part, is the interaction with cell makers and OEMs. We've made a lot of progress this year. The product has improved quite a lot, and that has helped us to interact with a lot more players. So currently, we have our product being tested by 8 out of the 10 largest cell makers in the world. We've been able to conclude a joint development agreement with one of those players very recently, and we're looking at securing one additional contract by the end of the year and most likely another one by Q1 of next year. So again, very busy on the downstream side.
Yeah, no, it's fantastic. It's what you want, especially in this market. It's quite difficult at the moment. So the fact that you guys are making quite solid progress is good to hear. I think one of the, given my audience at Graphite Hub are mainly investors, I think one of the biggest misunderstood pieces is the qualification timeline, how long this actually takes. It's not just as easy as, sending graphite to an anode player, they test it, great, we sign an offtake. It's a lot longer. So where are you at within this qualification timeline with the anode and cell makers?
Yeah, that's right, Harry. I mean, it's a very complex process, and that's because graphite is a very complex product. Graphite is not a commodity. It's a specialized product. It's a customized product. So you need to start the relationship with cell makers very early on. That's why, at CarbonScape, we started working with cell makers back in 2021, a company called ATL. ATL is the largest battery cell supplier for electronics application. And so they've been testing our products since then. The other misconception is you can only fully qualify graphite once you have an operating commercial line, which is not the case for us. We're operating from a pilot plant. So the typical process for us is we start by sending out a sample from our pilot plants, which the sample will be what we call the standard grade product. So it's not a customized grade just yet. It's just a starting point. We send it to a cell maker for initial testing. They'll give us a feedback, and then we'll slightly adapt the products to make it more tailored to what they're after from a performance perspective. If the results are positive, we then work together on putting together a joint development agreement to establish very clear goal from a performance perspective and also a very clear path towards a commercial stage. It means basically you have an agreement where you develop exclusively a product for one cell maker that you can then take to mass production. And after that, the goal for us is going to be providing improved samples from the pilot plants and eventually improved sample from our scale-up assets, the one I've mentioned in Asia. And so you're providing larger and larger samples, hopefully matching the quality of the previous sample. And eventually the goal for you is to provide a sample from your mass production line, from your commercial lines, which is matching the sample from the scale-up asset and matching the sample from the pilot plants. And then you can fully qualify the product. So looking at timeline for us, we are hoping to be able to go to production by 2028, meaning the full qualification of a product from a commercial line will be around then.
And when you talk about full qualification, in terms of volumes of providing that to customers, what sort of tonnage would you be looking at?
So right now we do on the scale of kilograms, so anywhere between 5 to 100 kilograms from our pilot plants. When we have a scale up assets, you'll go on the scale of hundreds of kilograms to single tons. And then when you start qualifying from your production line, it could be multiple tons of product.
And when you're talking with these customers, what is driving their interest in CarbonScape? Is it the sustainability aspect, the localization, or the price certainty? Or is it a mix of all these?
It's a mix of all this. I think you can add performance as well. The key driver, I would say, actually by far is performance. Performance is first. When you look at our products, I would say we're significantly better than natural graphite from performance perspective. And we are on par with most of the commercially available artificial graphites, but we have a higher capacity. So performance is a key driver. Number two is going to be costs. And in terms of our cost structure is very different to other graphite players. We have a lower cost position because we have a much cheaper feedstock. But it's not just about the cost level, it's also about the stability of that cost structure. Because when you look at the petcoke market or flakes, I mean, mine commodities or oil products are obviously very volatile as opposed to biomass is actually quite flat. So cost is key. And then the third is probably location and your flexibility in terms of manufacturing. We're not attached to a specific mine or specific refinery. We're able to envisage building assets basically anywhere in the world as long as we can secure access to our feedstock. And that's the case in Europe, that's the case in Asia, that's the case in North America. Four will be probably sustainability. What's your carbon footprint? What's your process? Any heavy usage of chemicals? And as you know, we're using a sustainable feedstock in the form of biomass. We have a low temperature process, so we're scoring quite well here.
And further to that, we do see one of the main selling points for some of these Western graphite companies is around sustainability. Do you think this is enough to win contracts, or does cost performance still drive these decisions?
So sustainability, I think nowadays, it was different 2 or 3 years ago, but today sustainability is a nice to have. For a lot of companies, it's not a must have. For us at CarbonScape, it will always be a must have, but it's one of the key drivers for customers. But again, performance and costs are definitely number one and two. So performance, the customers are going to ask you, are you able to match my performance targets? If yes, are you the only one who can do it? And in that case, you can name your price. If you're not the only one who can do it, are you cost competitive? And then they'll ask you, what about your location, any supply chain risk, any geopolitical issues? And then fourth will be, what about your carbon footprint? So again, performance, costs, manufacturing location, and then comes sustainability. It might vary slightly from one cell maker or one OEM to the other, but generally that's the way we see it.
Yeah. Okay. And we've mentioned a little bit around cost here, but when we look at the selling price for biographite, how does that differ to natural and artificial graphite?
Yeah, so I mean, we're not looking at selling at a premium because we are able to produce in Europe or North America or because we're greener. I think we need to be competitive and we need to be able to be competitive against landed Chinese prices within those markets. And because of our lower cost structure or lower biomass cost, feedstock cost, or lower energy consumption, we're able to offer that, which is key, right? Because I think that's the reason many graphite projects have not been financed out of China to date, is because we're unable to compete on price and they can be as green as they want. It's just not enough. So when you look at the typical cost structure for either artificial graphite or natural graphite, a large component of that cost is going to be feedstock cost. For us, it's a very small component of our cost structure. Energy for us is also a key driver, although we are consuming less energy when it comes to graphitization. We're still a large consumer of energy. So in terms of choices of location, our key drivers are going to be where is energy the cheapest, like many other industrial projects, and where is the biomass the cheapest as well. It's lucky for us that in both North America, specifically in the US and in Europe, the biomass market is quite long, so we're actually able to benefit from falling prices.
Okay. And from the conversations that you've had so far with customers, where are they going to be putting your product into? What sort of end applications?
So if we look at applications for products, based on the performance we see, which is high capacity, ability for fast charge as well, we see a good fit and good traction in both EV application and also electronics. And we tend to work with cell makers who work across both markets. For us, the EV market is obviously the largest one to address for now. ESS will be one to cover maybe later, very fast growing application, but in terms of cycle life requirements, it's much greater, and also it's a much lower price tag. So EV for it's a large one to address, but electronics, potentially you can make greater margins for. It's an interesting one for us to look into. I think if you also look at location-wise, where we get the most traction, well, traditionally the cell makers and OEMs we deal with are mostly headquartered in Asia, in China, Japan, Korea, but they all have or are building assets in Europe and North America. So we also still see that needs to integrate supply chain, to localize supply chain within those regions, which is important for us because the cell makers really see that what CarbonScape is offering as a great fit for this strategy.
Yeah, no, great. And so you've been at CarbonScape, is it about 2 to 3 years? Is that correct?
No, a year and a half, a bit
A
less than a
year and
year
a
and a
half?
half.
Yeah, okay. So you would have joined, when the graphite market, as we all know, the graphite market has been quite challenging lately. Are you starting to see signs of a recovery based on the conversations that you're having in the industry?
I mean, we see it from our perspective, right? And so that might be different for other projects. I think the issue around cost remains the same. Like this environment is not changing. We don't see a lot of recovery on the pricing side.
Yeah,
So it's about how competitive are you going to be able to be on the cost side. Although we have a low cost structure, we still need to do more work to continue decreasing this cost structure, and that means a lot of engineering work, a lot of R&D work in New Zealand, and you've seen some of that when you were visiting the assets. So this is not changing. It's still challenging, but we do
yeah.
see a very good traction for our product as we are able to prove now with the signature of new contracts, traction with customers downstreams, but also collaboration with other graphite iron players in Asia.
Yeah, I think from an investor perspective, they obviously can't see everything that's going on behind the scenes. But, a lot of the companies I speak to, they are making progress and there is a lot of interest, but it is just, yeah, it's a tough time for sure. Cool. Okay. And then so looking ahead, it sounds like it's been quite a busy 2025 for you. For the next, 2026, 2027, what should we be expecting to see come out of CarbonScape?
Right. So 2026 for us is going to be, I guess, earlier in the year, the conclusion of a number of key contracts. So an additional joint development agreements with a very large cell maker, potentially another 2 contracts on the downstream side. Same thing midstream. So on the technology de-risking, we're looking at concluding an agreement with a large graphite anode player to de-risk our technology further before going to mass production. So that's early in the year, 2026. And we're also looking at, obviously, we need to finance all this, right? So we're looking at securing the strategic investment from supply chain players and financial investors also by early next year. So early next year is the conclusion of all the discussions we've been having in 2025. And then we go into, the de-risking modes within the rest of 2026 on the product to make sure we match the specification that the cell makers want from our facility in New Zealand and eventually from the scale-up facility in Asia. And also doing more de-risking work with vendors, with tool manufacturers to make sure we're getting ready to go towards mass production and ramping up in 2027, 2028.
Okay, wow, it sounds like there's a lot going on at the moment. I'm sure it's keeping you quite busy.
Always.
Well, no, thank you, Vincent, for coming on today. It's been a pleasure, and just to do
Yeah.
more of a deep dive into CarbonScapes. Yeah, appreciate your time.
Thanks, Harry.
Thanks everyone for tuning into this episode of Graphite Hub's interview series. We'll see you next time.